Thank you for tuning in to another edition of the Vulcan Report. This Vulcan Report will be for trading on December the 2nd, Monday 2013. Hope everyone had a wonderful holiday and ate plenty of turkey. What we're looking at is a chart of the E-mini S&P 500. Notice that we are still in a bull market. Notice the bull right here at the bottom right hand side of your screen, signifying that the bullish trend is still intact. We have this long green line here showing that the bullish momentum is still locked into the market. Even though we've had some downtrend channels, we've had nothing but steady up movement, and that these pullbacks have been nothing more than buying opportunities, and that's how they've been traded. In addition to that, what else do we have here? Well, we see that we're starting to, even though we're edging higher, and we did on Friday, it's still kind of sideways because we didn't close above the previous high. We just spiked it. A spike is when the market moves and puts in a new high or a new low, but fails to close above the new high or the new low. That's what a spike is. Another example of a spike would be on November the 13th. We spiked, hit a new low, took out the previous low here, but we didn't close at a new low. We reversed and went higher, so that gave you a fresh buy signal. Likewise, on November the 8th, we spiked, took out the previous low by a few ticks, and then reversed and closed higher, giving you thus another buy signal. So these spikes to new lows have been reversals and always led to new highs. Once again, November the 1st, same thing. Okay? So basically what we see here is a market that refuses to pull back. All pullbacks or corrections are bought right back up, and then we put in previous highs. However, as of Friday's trading, even though it was a holiday, I cannot ignore a bearish sign here. Friday's close was the first warning sign of another pullback in the market. The last warning sign you got November the 18th and the 19th. We did put in a new low, but nothing significant. Prior to that, October 30th, we did pull back, but nothing really to write home about. So after this pullback is established, I would see yet another buying opportunity as we bounce off of this trend line support right here, okay, of 1176. So 1176 is the new support for the next leg up of the move. I don't see us pulling back and testing the 1776 level. To be honest, I don't even think we're going to pull back below 1800 again. That's just my opinion. I could be wrong. The market will have to be the final judge and arbiter of that, because I have no idea. Been wrong before. That's nothing new. I could be wrong again. So for Monday's trading, basically you have a long at 1807 3/4 and a short at 1802 1/4. Extremely tight trading range. I don't see the 1802 1/4 being triggered though. So that 1807 3/4 long should hold and should be triggered, and we should be able to take out the 1812.50 high with that 1807 3/4 entry on our way up to 1820. I see a possible 1820 by the end of the week. I don't again see another pullback coming. If anything, it'll be a few points and that's it. We have major support here, like I said, at the 1776. Let's compare that now with the Dow. Okay, switching our focus and attention now to the Dow. Alright, same thing. You see that black bar there? Alright, that's a signal that we could be topping out momentarily. So you want to take heed of that. Again, I see pullbacks in the market continually being bought. We're starting a new uptrend channel leg here. Alright, that should help support prices, and the trend line support on the Dow is at the 731 level. Alright, 15,731. I don't see us going anywhere near that. Therefore, for the Dow, again, you know, this bar though is a bear sign that a pullback's coming. So tight trading range on the Dow too. For Monday, long at 16,111, short at 16,55. Tight trading range. Yes, I know, but what are you going to do? All right, now take a look at the Nasdaq. The Nasdaq is much stronger than the other two indices that we looked at, the S&P and the Dow. So it's just straight on up here. All right, no corrective pullback in sight, but again, a very tight trading range. Tuesday's trading is long at 34.97 and 3/4, short at 34.82 and 3/4. So very tight trading range here in the Nasdaq. We don't know if we're going to correct with the other markets or if we're going to stay up. So this one's yet to be determined as well. Tight trading range, like I said. What are you going to do? You have to trade it. You have to watch it. There's not too much you can do. There's not a whole lot you can do. You watch these things and then you try to get in where you fit in. But you have to trade the volatility and trade the ranges. And it's just good to keep your risk as low as possible when you're trying to navigate these things, because you just never know. You never know how the market is going to respond or how it's going to react. So you do what you got to do. Alright, finishing up the indices, here is the Russell. Russell also putting in that bearish signal. These white bars is the beginning, usually before you get the red alert black bar. So it's showing an overbought situation, but we are locked in on the bullish market, bullish momentum. Ranges are also pretty tight here. So the entry point for the Russell is going to be long at 1143.40, short at 1138.80. And once again, we have trendline support right now in the Russell at, I would call this 1124.10, and that's this black support trend line right here. If this thing is going to continue and gain momentum and run, that's what you're looking at. All right. After this long period of consolidation we saw here, see this? Several weeks of just going sideways, doing nothing, just running up and down the ranges. Now we finally get action right here. All right, taking a look now at crude oil. We've come back into the volatility bands. All right, technically speaking, it's now in a sideways market. It's no longer a negative pulse waving. A negative pulse wave, for those of you that are new to these videos, is when we break below the trend line support. All right, and lock in bearish momentum like we did here. Positive pulse wave is when we break out here, like we did on August the 28th. Couldn't hold it, collapsed right back down again. Okay, that's what that means. So what's happening here? Well, we still have a bear market. Okay, we're into the corrective phase of the bear market now, and what we're looking to happen, what we're looking for now, is a situation to see if and when the market is going to continue to move in this path. We see we corrected a couple of days and then we crash right back down again. Now the question is going to be, are we going to put in a new leg down? Technically speaking, we did put in a new low here, but it was a spike because we closed above it. We didn't close below the previous low. We closed above it. So the question is going to be is, are we going to really take off now from here and head back up to the $98 resistance point? Tight range, tough question. So the trading on this one for Monday is going to be long at 92.98, short at 91.96. Taking a look now at gold. Gold is now in jeopardy of headed down toward that 1150. As you see, momentum is no longer locked into the downside. We put in a nice little reversal, trying to start a bullish momentum locked in. Trying to. All right, that's the last trading day. So on the 29th of November, that's what we did. We'll see if we can gain momentum here and start to correct and get back above 1250. On a close, that's going to be difficult. But as you can see, we've done nothing but come down. Even on little corrective bounces, new shorts will just pile in and just keep crashing the thing. So it's starting to look a little bit like crude oil, isn't it? Well, so what are we going to do for Friday? Well, for Monday's trading on the crude oil, on the gold market, we have a long at 1255.50, short at 1244.10. Once again, tight trading ranges in the markets. All right, finishing off now with silver. Silver looked like it was in jeopardy of hitting that $18 handle as this long period of locked-in bearishness, negative pulse waving. Now trying to correct as of the 29th. Is this setting up another leg down, or can we bounce from here and get back up to around the $21 handle? Well, that's yet to be seen. So what do we do in the meantime? Tight trading range again, long at 2007, short at 1982. Remember, take what you can, give nothing back.